Good morning. I'm here to present on ethics in accounting. Ethical missteps destroyed Arthur Andersen, a titan among accounting firms. As auditors, your commitment to integrity and independence is the firewall against such a catastrophe. So ethics in accounting, critical. Your responsibility is so critical. The importance of ethics in accounting. They ensure trust and credibility in any financial reporting, as many people make decisions based on your reports. You're basically gauging the health of a company. Violations of those ethics or being incorrect can lead to scandals and a cascade of accounting failures, and ultimately not even just one corporate failure, but multiple. And the example of Enron is what we think of the most. Ethical principles for auditors is integrity, honest reporting, and skepticism. You can't complete a report because it's easy. If you've got some complex sales or purchases that are going on, you must make sure they're accounted for correctly. And that was the beginning of the end of this fall for Enron, as they came up with a very complex way of reporting some money, and it got past the auditors. The objectivity is to avoid conflicts of interest. Confidentiality, you will be protecting sensitive information that's, financial data. You're responsible for it, but also how do you report it if it's confidential? We'll talk about that. Professional competence, stay informed on the regulations, stay up to date on recent scandals, make sure that you understand all the patterns and the new adaptations due to them. So common ethical challenges in auditing are pressure from the clients or even maybe your own management in the auditing firm. I was on a plane and I popped in a video, and there was the CEO of Delta Airlines, and he was a new accounting hire at a big firm, and he came upon this project he was working on to audit, and there was a real complex set of procedures, and the management of the company he was auditing kept saying, no, this is the number, and he kept saying, no, I can't come up with that number. Well, he kept asking, and even his own management said, look, just move on. Well, he didn't. And it turned out the reason it was complicated and he couldn't get to the number is it was fraud. He now is the CFO of Delta Airlines. And as a young first-time employee, he was, concerned about speaking up, but he did so anyway. So I urge you to learn from him. Failure to not speak up looks like this. Detecting fraud and misrepresentation is what you're supposed to do. This is a chart of one of the largest companies at the time, Enron, and it's declined rapidly, and then a flat line, much like a heart that stopped, which of course it did. So the consequences of unethical decisions for business and auditors, it can lead to the death of a company, and even Enron, some people did die, maybe due to the stress of the conflict they went through. One of their founders, I believe, died. So case study, Arthur Andersen and Enron. Background, Arthur Andersen was in the big 5 accounting firms. It was a place to work. It was just roaring, doing great. It had some ethical breaches, and the firm actually wound up assisting Enron in hiding their financial losses. Enron was reporting about double the income that they actually had. And when Enron began to fail, it's reported that Arthur Andersen destroyed documents, audit documents, and they wound up being convicted of obstruction of justice. And of course, the firm no longer exists. So lessons learned. There is nothing worth your integrity. Your integrity is worth more than money, and your independence must be genuine at all times. You cannot be manipulated by the company you're auditing. Another case study was Toshiba Accounting. Toshiba faced internal audit failures as they began to overstate their earnings. And over several years, it wound up to be a pretty big misstatement of earnings. So that outcome of $1.2 billion of money that wasn't there led to the resignation of the president and some predecessors. Lesson learned, governance structure of that company must be maintained all the time. And a small slip can turn into a big problem or a lot of money that doesn't exist. Another case study is Ernst & Young's for ethic violations. Wonderful, huge, big four accounting firm, titan of the industry. They had a change in their ethical procedures, and they started to actually care about keeping clients, where before that had not been something that drove them. And it sounds like that led them to a $11.8 million fine for their failures. And that's a big fine. That's a lot of money. So again, your ethics, your integrity, your independence, they should not be able to be bought. It's just too much of a price to pay. Lessons learned, ethical standards must be enforced at all levels, not just big cases, not just big companies, but all levels. Regulatory framework and ethical standards. You need to understand the SOX, the IFRS, the generally accepted accounting principles. They must be followed. If not, you need to explain that they're not being followed. You need to understand the role of the AICPA and the PCAOB and their ethical guidance for auditors. You're not alone in there. There's people and organizations that can guide you and help you make sure that you remain ethical and independent and that your reports are accurate. And the Frank Dobbs Act was there to help whistleblowers. It came a little bit too late for some of these companies, but it's really there to keep the accounting standards full of integrity. It's a check and balance. It offers whistleblowers protection from retaliation, and they're anonymous. They will not reveal your information. And also, if they recover money, you may get some compensation. So they understand what it takes to be a whistleblower, what it takes to report fraud. And there is an office now to deal with that. So the best practices for ethical auditing: maintain independence. I've said it 100 times. If you do not leave with any two other words from here, being independent and being ethical is utmost of importance for auditors. You cannot have a biased audit. Exercise skepticism and due diligence. Be skeptical and then document it. It must be important, like the Delta Airlines, when he was a new hire as an accountant. He just kept saying, I'm not getting the number. He kept asking questions, and he got to the answer. The number wasn't real. Ethical decision-making framework is a guidance for auditors. Don't deviate from it. And make sure you're not this guy testifying before the House of Representatives while all the country is watching, because the overstated earnings were double of what they were overstating their earnings by double of what they actually earned. How are you going to account for that money now? You don't. Your company dies and people go to jail. So conclusions: your integrity is not worth any amount of money. You cannot sell it. I just want you to keep that in mind. Don't wind up being in front of Congress testifying. Scan this QR code and learn more about Sharon Watkins and the Office of the Whistleblower at Office. It's on YouTube, and it shows the office in the government, Office of the Whistleblower. So if you find some fraud, you have ways to report it. No excuse. Please do it. Thank you.